My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make a little money. My job is not just entertain, but to educate. Teach. Call me at 1-800-743-CNBC and tweet me at Jim Cramer. What can I say about this third quarter? The one we just put paid to. I mean, come on, it was a wacky, crazy 3 months where the unthinkable just kept happening. Today's action notwithstanding, Dow inching up 17 points, S&P advancing 0.42%, NASDAQ gaining 0.38%. The months of July, August, September gave us some outstanding returns. The S&P 500 alone at 5.5%. Not only that, but the notorious month of September, traditionally among the worst months of the year, actually delivered some terrific results. With the Dow climbing 767 points, S&P gaining 2.02%, NASDAQ jumping 2.68%.
House of pleasure.
Today, though, Jay Powell kind of spoiled the totally bullish narrative. He said in an interview that the Fed isn't in a real hurry to cut rates. That suggests the next rate cut likely won't be a 50 basis point cut, but who knows? If the data gets worse, if we have a very weak employment number on Friday, then maybe the committee will change its mind. You know, my view, this whole parlor game of second guessing is mostly a waste of time. The market was weaker throughout the day, but then got very ugly when Powell dropped the hold on a second bomb before rebounding into the close and then soaring. I think the late day rally showed the market's true colors. Now, the world is regularly filled with polarizing and sad days. We know that. We can easily come up with dozens of reasons why stocks should have been down for the bulk of the session, if not the month or even the whole quarter. In fact, the easiest tale for me to tell this evening would have been, oh, here's 5 reasons why the market got obliterated. Sell. Got to limit it to 5 because I don't have time to list every potential cause of a big decline. That never happened. Problem is, that's bad journalism. See, when I was a cub reporter for the Tallahassee Democrat and the LA Herald Examiner, I learned that bad news sells, but good news, well, not so hot for the newspaper biz. That's how my late editor at the Her-X explained why I had to write tough homicide articles or get gruesome details about plane crashes or lurid tidbits about the deaths of movie stars when I just wanted to mix some good stories with the sordid tales. But here I am on Mad Money, trying to do something different. In a world where the horrid news writes itself, whether we're talking the Middle East or the hurricane-ravaged parts of North Carolina and the Big Bend of Florida, where I once lived, good news feels like a scarce commodity to me. My late editor, he knew what people would read. He knew that if the cereal box and the paper were on the table in the morning, the more prurient my stories were, the less likely the box of Frosted Flakes would dominate the breakfast table conversation. So at the risk of telling some good news, let me give you 7 positive stories, 7 wonders of the world, or at least 7 wonders of the third quarter, the one just concluded. First, there was no hard landing. There wasn't even a soft landing. There was no landing at all. The economy never stopped growing, even as inflation moved down and unemployment moved up, to quote Fed Chief Powell from earlier in the day. Can we get rid of the whole airplane dichotomy, please? The goal should never have been a soft landing. It should have been growth with little inflation. You know, that's exactly what Powell gave us. Well done, Chief. Second, Powell managed to do something else that's borderline impossible. He enacted a double rate cut without a big surprise factor. On the verge of this first of many rate cut announcements, there was a little back and forth about the possibility of a 25 or 50 basis point cut when the Wall Street Journal reported that the double cut was, in fact, a possibility. You know, that was perfect. Just a great leak to the Journal, because when we actually got 50, it didn't cause a panic. Powell has the least drama of any Fed chief I can recall, and I recall a bunch of them. He is patient to a fault with the press. He's intensely private. I say good for him. Third, going into this past quarter, we've been struggling endlessly with a market that only seemed to care about the Magnificent Seven. When would the rally finally broaden out to the other 493 stocks in the S&P 500, to say nothing of the cheap small cap outside the index? Well, that's no longer an issue. The small caps soared. The market broadened. There were many stocks that rallied, and a lot of money was made away from the 7. Banks, utilities, retail, healthcare, housing, transports. They all had their day in the sun. No more narrow market, people. Wall Street came in the third quarter liking the same old, and came out liking everything, including the same old. Oh, and get this. NVIDIA, it took it on the chin, showing that CEO Jensen Huang is still human. even if I insisted it be called the modern-day Da Vinci, because the guy's a true Renaissance man. Fourth, despite the fact that we're headed into what Michael Semblas, chairman of market and investment strategy for J.P. Morgan Asset and Wealth Management, calls the most polarized election in 100 years, the market chose to ignore the drama. The market didn't even treat the Biden debate fiasco as a speed bump, and adjusted without an ounce of trepidation when we got changing the guard from Biden to Harris. These changes mattered immensely to our United States of America, as did the attempted assassination of Donald Trump. But Wall Street might as well have been located on another planet. Fifth, we actually had our first break in the formerly rampant housing inflation figures as we finally begin to see extra homes coming on the market. I think this new housing supply might be the break we need to get a handle on the last intractable asset class that refuses to go down in price. Right now, it is tipping in Powell's favor. At last. Sixth, the war in the Middle East is raging and oil is going lower. I will have more on the incredible anomaly later in the show, but suffice it to say, most people would not assume that was about to occur. I kept hearing that we'd have stagflation led by oil. Dream on, bears. Didn't happen. Seventh, the Chinese market managed to put together a real rally, despite the economic news being overwhelmingly horrible. President Xi got stocks higher when the government ordered buybacks and a lot of free money. Now that the Chinese markets had a gigantic move, okay, now we know that many U.S. investors will pile in, take the Chinese out of some really awful positions. Bad move, but it'll certainly help bolster China's ailing economy. Now, there are plenty of other miracles in the third quarter, gigantic run in anything nuclear, because we desperately need more electricity to feed the data center beast. I was worried about GE Vernova when it was spun out, but it turned out I thought it might be a bust. Turned out to be an incredible mover. Eli Lilly's stock climbed on overwhelming orders for GLP-1 drugs, but not a single food or beverage company saw a decline in sales. Talk about a wonder. Starbucks got a new CEO, Brian Niccol, and the stock company went up 20 points, and they never gave back those gains. More on that in a moment. Meanwhile, all the real ugly duckling housing-related stories turned into beautiful swans. Bottom line, for once, good news was actually good news and interesting. You'd much rather talk about the terrific third quarter at the breakfast table than focus on what's written on the back of a cereal box, wouldn't you? So the next time you start to feel horrible about the state of the world, remember that miracles can still happen, at least in the stock market's third quarter. Let's take questions. Let's go to Robert in New York. Robert.
Jim, how are you today, Jim?
Robert, I'm doing okay. What's happening with you, partner?
I'm doing really well. I was out on my boat today, and everybody's like, oh, how do you afford this boat? And I said, it's very simple. You listen to Cramer, you get some great stock advice, and you make smart decisions that Cramer tells you what to do. And this is how you get the boat.
Staff, Robert, I'm looking at my staff, and I'm telling you, I always say that when Robert calls, he's got horse sense.
Jim, I'm telling you exactly the facts, okay? And let me tell you something. The new Powell indicates further rate cuts, okay? And you said you can't fight the Fed. I listened to you religiously, okay? And Marty Zweig was one of the greatest investors of our time, and that was his thing, okay?
That was his thing, and don't fight the tape either when you're fighting. Don't fight the Fed, don't fight the tape. All right.
Because everybody says, oh, we're going to sell because they're going to lower the rates. It's baked in. But Cramer has taught me through the years that's not necessarily true. Okay?
All right, Robert, let's get a stock going, then we're really okay.
This next stock could benefit big time with the decrease in interest rates, not to mention the Apple Pay partnership that could be used, and there are no late fees, okay? It's the antidote to credit cards, lower delinquency than any other credit cards out there, and they made this deal with Apple. They have a great underwriting department, Affirm.
Okay. Oh, geez, Affirm, that's Max Levchin. He and I are we're like about as pals as Max has. And I think that Affirm is a real good stock and is going higher. Twofer, I like PayPal too. Let's go to Lou. They're Lewin, not booing, in Pennsylvania. Lou.
Hi, Jim. Thanks for taking my call.
Of
and
course.
for having such an outstanding and competent staff.
They're so smart. And I missed them last week. I tell you, I was telling my wife I missed my staff. She goes, Jim, will you give me a break? But, I did. Okay, go ahead.
They're what makes your show really function so smoothly. I appreciate it.
Thank you.
I'm calling to get your opinion about a large pharma company you've extolled in the past, but which is down about 2% despite a very good day today over the last 3 months. It's likely best known for its GLP-1 drugs for diabetes and obesity, but its price is now a bit obese itself. Maybe it should take some of its own medication. there are several new upcoming competitors, but also new indications on the horizon. Company, of course, is Lilly. What are your thoughts?
Okay, this is a great point, Lou. And what's going to matter with Lilly is the moat it has by building these gigantic factories, which cost a fortune. Reminds me of the way Intel used to be in the heyday. That means in the 90s. You can't really compete against a company with that amount of firepower. I remain steadfast on Eli Lilly for my charitable trust, and I urge you to read some of the stuff I've been writing about Lilly, because I think I got a real beat on it. And thank you for those kind comments about my staff. Not my wife's going to be about our staff, because it's not my staff, it's our staff. All right. For once, good news was actually good news, and it was able to send stocks higher in the third quarter, which is proof that miracles can still happen. Tonight, last week the FDA approved Bristol Myers treatment for schizophrenia in adults, and I am learning about the implications of this new class of medicine. Hey, by the way, it's one we haven't seen in decades from the company's top brass. You better listen to this. Then, it's a battle of two animals when it comes to a turnaround at Starbucks. I'm laying out the bull and the bear case and where I come down. And H.B. Fuller makes a host of adhesive from labels to solar panels. So should investors stick with the stock? I'm checking in with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.